Hi, good afternoon. Thank you for joining us. My name is Joanna Nelson, and I'm with the New Mexico Economic Development Department. And today you've tuned in to a presentation made by the New Mexico Finance Authority addressing the Small Business Recovery Loan Fund. And this session is focused on help for small businesses. Before we get started, I did want to let you know that we are recording this presentation, so it will be available online. You'll be able to access the recording after the presentation. We'll send out that link, and we will send out the slides, so you will be able to access any live links or review any information that you missed. Please, we want to encourage you to ask questions during the presentation. You can type those questions in the box that you can see. You should be able to see it on the right side of your screen. There's a little gray horizontal box with an arrow that says questions, and not that intuitive, but there is a kind of a white space, drop down space under the questions box. So feel free to type those questions in, and we will answer those at the end of the presentation. If you have any questions while we're going about how to do that, feel free to send a chat. You can do that as well. You can send a chat to me, and we can figure out how to get your questions answered. I did want to let you know some information from the Economic Development Department in terms of COVID-19 response. You can find updates on our website, which I've provided in these links. We are putting out a weekly resource wrap-up, which has grants, loans, news articles, and webinars. Every bit of information that's coming out about the recovery loan program, we will include that. So if you are not getting those announcements, you can use this link and you can sign up to get those. We are putting all information and news on our social media channels, which you can find on Facebook, Twitter, LinkedIn, and we do have regional reps throughout the state that can help answer any questions. Here's our YouTube channel. You can see all previous webinars, and then you can access our Opportunity Zones website. Here is Mark Roper's contact. He's the division director. Here's my contact, and please reach out. Let us know how we can help. So without further delay, I want to turn it over to Marquita Russel, who is the CEO of New Mexico Finance Authority, and Adam Johnson, who is the Chief Officer of Program Operations. So take it away, Marquita and Adam.
Great. Thank you very much, Joanna, and thank you all for attending today. I'm very excited to be talking to you today about the Small Business Recovery Loan Fund. Our presentation today is really directed to those business advocates and technical assistance providers that will be helping small businesses find out about the fund and help them prepare for the application process. It's not particularly different than the ones that we'll do for businesses directly, but it's good information for you to have in terms of knowing how to prepare our businesses. So the first thing to tell you is the Small Business Recovery Loan Fund was created as part of the special session that happened in June. It was, I think, Representative Matthews who introduced House Bill 4 and Senator Candelaria who introduced and sponsored Senate Bill 3, and that was ultimately the bill that got signed into law on July 7th. It's a $400 million program that provides low interest rate loans to businesses that experienced hardship as a result of the public health orders stemming from the COVID-19 pandemic. They are 3-year loans. They can be used for a variety of expenses. They do not require personal guarantees or collateral, and they do not have payments for the first year. Specifically, the amount of money that you can apply for is 2 times the monthly average expenses, not to exceed $75,000. So that is not, it's an outright amount. So the amount you qualify for is the amount that the application puts down. You can't ask for less and you can't ask for more. The interest rate is 1/2 of Wall Street Journal Prime, Wall Street Journal Prime right now is 3.25. So the current interest rate right now is 1.625%. And that's fixed at the time of the loan. So that won't change at all after the loan is made. And for those of you that don't track prime rate, it hasn't been changing a whole lot. So we expect that rate to be there for a while. As I just mentioned, there is no collateral and there are no personal guarantees. And the sponsors of the bill did that so that they would reduce any barriers of access to the loan program. The minute you start to introduce collateral, you start to introduce values of collateral and things that make it difficult for many, many small businesses to access traditional financing. So they took away as many barriers to access as they could with this program. The loans themselves are 3-year loans. They are interest only. The interest is paid annually. So your first payment is not due for an entire year after the date the loan closes. You'll have a second payment 2 years after the date the loan closes. And then on that third anniversary, you'll pay accumulated interest plus all principal at that point. If the borrower or the business needs to, they can convert the loan to an additional 3 years with monthly principal and interest payments made at that time. And the interest rate will stay the same. So it doesn't change at the time that we convert the loan, if indeed that's what the business would like to do. So if the loan was made at 1.625%, at the day of closing, the day they convert it, it's at that same interest rate. So there is no interest rate conversion. I have to point out that this is a loan program. It's not a grant program. That's an important element for determining constitutionality of the fund. The eligibility requirements are fairly specific. The statute requires that the business have a reduced operation or even be closed as a result of the public health order, that the business had annual gross revenues of less than $5 million as determined by the 2019 tax return, and that the business experienced a 30% decline in monthly gross receipts or monthly revenues in April and May of 2020 as compared to those same months in 2019. So you have to have a 30% decline in April and a 30% decline in May. It's not the combination, but each of those months has to have reached a 30% decline from over the 2019 month periods. And we would note that businesses, according to statute, are either any for-profit businesses, could be sole proprietor, partnership, anything that's a legal entity, or it could be a nonprofit, specifically a 501c3, which are those charitable organizations, or 501c6, which are generally associations. The Small Business Recovery Loan Fund, in addition to creating the fund itself, the Act created partners for the NMFA to work with in implementing the fund. The first was what they call loan servicers, and these are banks, credit unions, and community development financial institutions. Those are alternative lenders. And they partner NMFA with those because those are the places where businesses go when they need access to funding. So this is yet another access point for businesses to find out about the potential funding. The Finance Authority, we'll go through this in a minute, but the Finance Authority will use these loan servicers to help make certain that the application is complete and that the applicants have submitted the right documentation and inserted the right numbers into the right fields onto the application form. The Act also recognizes the critical role that technical service providers play in the lives of small businesses, and they create something called a service provider that can be paid a fee equal to 0.5% of the loan amount that we make to a very small business, and those would be businesses that have annual revenues of less than 500,000. So if it's a very small business, and they're receiving ongoing technical assistance from a service provider, then that service provider is eligible to receive a fee to help them pay for or to cover some of the costs associated with that technical assistance. Specifically, the service provider does have to be a nonprofit or a governmental organization. So those would be your small business development centers, your community development corporations. There are a number of them across the state, either in small cities or many of them actually in the more rural area, in the more urban areas. But they have to be able to provide technical assistance, interactive technical assistance, as it relates to sustaining business practices, for training in marketing, any sort of administration or financial management, and complying with legal requirements, licensing, and tax liabilities. So those are the specific requirements. So what that means is that technical assistance providers cannot get paid that fee for helping a borrower submit an application, but they can get paid a fee for providing the ongoing technical assistance to help them weather the storm that's been created by the pandemic. And as I mentioned earlier, those eligible borrowers, those less than $500,000, if they indicate at the time of application that they're working with a service provider, that service provider is eligible to get a fee. All right, so the application process, which we'll go through in some detail, Adam's going to actually give you a walkthrough of the application process, is an online system, and it's going to be accessed at our brand new website, nmfinance.com. Those of you that are familiar with us, if you are accessing us through the nmfa.net website, it'll be redirected to you so that you are able to access the online application. The application opens next Wednesday, August 5th, and it's open statutorily until December 31st or until the funds are gone, whichever happens first. Submitted applications are going to be reviewed by those loan servicers, but I would note that NMFA is actually the entity that makes the lending decision and will enter into the loan agreement. So though these institutions are called loan servicers, borrowers will not be working with those banks, credit unions, CDFIs after they've submitted the application. So once the application is complete and goes to NMFA for an ultimate decision as to whether or not to make the loan, that relationship for purposes of the small business recovery loan is over. So you won't be making your payments to that bank. You won't be asking them for help later on. You'll be coming to NMFA as we are actually the entity making the loan. The naming on that is a little confusing, so I wanted to make sure that was clear. And then pursuant to the statute, applications are processed on a first come, first served basis. So wanted to go a little bit over just the high level of the application system. Adam will take you through more of the detail about how the actual process works. But the one thing I will make certain that you understand is that businesses will need to submit certain documents in electronic format at the time they apply. The application system, though incredibly efficient, does not allow businesses to save the application and return at a later time. So we're going to be asking businesses as they come in, do you have the documents you need to start? If not, we're not going to let you answer the next question because you will have wasted your time. It will eventually time out on you. Those specific documents that are needed are going to be your 2019 business tax return. And that will vary depending on the kind of business type that you are from a legal entity. So, you know, if you're a nonprofit, for instance, that's your 990. For the for-profits, there are different forms. We will need to see for specifically for the for-profits, copies of the forms that they submitted to the Taxation and Revenue Department, evidencing the receipts for the months of April and May of both 2019 and 2020. That's to help us determine the amount of decline that happened in that time period. For nonprofits, since they don't have taxable receipts, they'll actually be required to submit monthly income statements or profit and losses for the fiscal years that include April and May of 2019 and 2020. And that can vary based on the nonprofit. Usually nonprofits' fiscal years will correspond to their business activity cycles, so that can be different. We'll also need to see any CARES Act loan documentation. That's a requirement of the program that we need to look at that and deduct that for determining the amount you're eligible to qualify for. And then for-profit businesses, the statute requires that at least 80% of the control and ownership reside with New Mexico residents. So what we need to do is to determine whether or not business owners meet that definition, which is, I think, 185 days in the state. We are doing that through demonstration of you're paying personal income taxes to the state of New Mexico. And so we'll be looking for those 2019 personal income tax returns for any equity owners of the business. If you've not yet filed your 2019, for this purpose only, for New Mexico residency, we will also accept your 2018 with evidence that you have filed for an extension at the federal level. And then lastly, all businesses will be required to authorize NMFA to pull a business credit report. So want to make sure that it's clear that it's not for personal credit, it is for business credit. And specifically, what the Finance Authority will be looking for is responsible credit behavior in 2019 with the 3 types of creditors, and these are creditors that we think are consistent across all of the eligible business types. That includes sole proprietors, nonprofits, businesses, corporations, and that is those businesses, those creditors that deal with telecommunications, utilities, and rent or mortgage. So if you've shown responsible credit, you're deemed to be credit worthy and can continue on in the process. But if you have collections in 2019 or charge-offs in 2019 for telecommunications, utilities, or rent, then that will disqualify you from the program as well. And then lastly, no, that was it. That was the business credit report. Sorry. This is my lastly. Applicants will be required to provide checking account information at the time of application. And so the checking account will need to be held in the name of the applicant at a federally insured financial institution. This is for 2 purposes. One is for so that we can turn around payments to businesses quickly. So we'll need to know upfront that you've got that account, and we're going to verify through a financial application system called PLAD that that the account is valid, that there weren't any mistakes in entering it, for instance, or that someone is not trying to perpetrate fraud and putting in your account information. And we're also going to look to see that the account is named, is held in the name of the applicant. So we're going to do 2 very specific things. I would note that, as Adam will show you in just a few slides here, that the application system has built-in logic. So applicants that do not meet the loan qualifications set out in statute will not be prompted to input that account information. So you don't have to share your bank account information unless you are already deemed to be qualified. And all of the information is held in a very secure system. The system we use is called FormStack. So that's a secure system. It's not subject to disclosure. The only thing under law that we're able to disclose are the names of the borrowers. So if in fact you apply and you're not qualified, your name is not released. If you do qualify and we make you a loan, for purposes of public disclosure, we will say that that you were one of the recipients, but the name of the loan, the amount of the loan is not disclosed, nor is the location of the business. So it's solely just the name. And with that, I think I have fumbled through my slides. I will turn it over to Adam to go through the actual application process. Did I miss a slide, Adam?
No, I don't believe so.
Okay,
Thank
good.
you, Marquita. Let me just end the slideshow and get my right browser field up. Just a moment here. There we go. Great, thanks everybody. Thanks for your time today. I'm going to go through a couple of sample applications. I'm going to focus mostly on the criteria and the detail in the application, and then touch a little bit on the workflow. Before you, we have the very beginning of the application where we've tried to provide all of the detail that's required to proceed right in the very beginning for the various types of organizations that are going to be applying for this funding. There are still a few notes left in here that I'll be removing as right before we go live, so you can please ignore those comments. But as Marquita mentioned, the very first question asks you if you have 30 or 60 minutes to complete the application. And I would actually share with the group that if you have all of your required documents, I think the application will probably take closer to the 30, if not less. It's incredibly simple and has been simplified so that you're not being asked questions that don't apply to you. In the case of the sample before you here, what we've got is Megan Stiles, and Megan is a sole proprietor, and she's provided her basic information to the Finance Authority. And as you'll know, what happens with the form is that it, as Marquita mentioned, is any sensitive information is not asked until after you've gotten past the questions that will determine the eligibility. Right here is the revenue and decline calculation. Since she's a sole proprietor, it's asking for the numbers that are on the CRS returns for these months in 2019 and 2020. The form then goes ahead and calculates whether or not they meet that 30% drop in revenue to qualify, and then provides the answer back, and then the applicant is allowed to proceed. The next calculation in the form is the average adjusted monthly expenses. Business expenses is defined specifically. This is the language that's in the statute. Excuse me. And the calculation for this qualification, or I'm sorry, for this calculation, which is what ultimately becomes the loan amount, is the total expenses on the 2019 tax return. And we are providing to the applicants in every case the exact form and the location of the number that they need to supply in this field, just to try to make this incredibly clear and concise from the beginning. In this case, Megan has $250,000 in total expenses. The law requires this amount to be reduced by any deductions. So for depreciation, so Megan's got $10,000 in depreciation for her tenant improvements in her facility. And then the law also requires that that annual amount be reduced by any CARES funding. And so Megan received a $40,000 PPP loan, and that's being backed out of this $200,000. That amount is then divided by 12 and multiplied by 200% or 2, and calculates the loan amount for Megan. The next step in the process is Megan would, if she's working with a credit union, bank, or CDFI, she would begin typing in the name of that institution, and in the background we'll have all of the enrolled loan servicers who are going to be helping NMFA with the review process. That'll automatically pop up the one that they know. If they don't know who they would like to work with, they can simply type "I don't have one" and provide that to NMFA, and we can assign to a reviewer internally. The next portion of the form requests an anticipated use of funds. And I'd like to note for the audience an incredibly important point is that there is only one requirement of the anticipated use of funds, and that is that not more than 20% be used for salaries of the owners of the company. Other than that, this is really a request for us to be able to track an anticipated use, and it doesn't have any onerous requirements on anything else other than the 20%, or conversely, the 80% go to operating business expenses. It calculates whether or not you've entered 100%, and also asks a question as to whether or not you expect the funds to be spent solely in New Mexico or otherwise. The legislation also tasked the Finance Authority with tracking employment-related numbers to report back to the legislature. And so here we start that process off by requesting the number of employees on March 1st, the number of employees as of application date, and then lastly, any sort of optimistic or pessimistic view on the future as to what maybe the outlook looks like for a year from now. And the Finance Authority will be coming back to the folks that do receive this funding with follow-up questions to see how in fact these numbers do turn out. We have a few questions in here about the also what code they supply when they submit to their various tax agencies, both federal and state, for what industry they are in, as well as any of the diverse business classifications that they may qualify or may have, again, for reporting purposes only. Lastly, the applicant will come to this section where we have all of a place for each one of the documents that needs to be uploaded. We took this approach so that folks didn't feel like they had to scan a massive packet to get into one upload file. So there's a space for every single one that is being requested. This section of the form does change. It has logic depending on the answers to the questions that have been provided. And I will briefly show Megan's other version of her business. And so Megan decided that she would incorporate, and she became an S Corp. And in this instance, you will see that some of the different logic has changed. Specifically, I can take you down here where you can see that the request for the actual form where the information will appear has changed. So we've done this to try to make this as clear as possible and easy on the applicant to fill out the form. In addition, most of the rest of these fields remain the same, but in addition, you can see what we've done down here is we've changed exactly what form we've requested to be uploaded. After the certification questions are asked, that's when we will connect with our self-verifying third-party company called Plaid. We will be providing another form inside of the secure website that this will be hosted on to enter your online banking credentials, and that will kick off the process of verifying the bank account and sending that information separately and securely to NMFA for to provide the proceeds of the loan from, I should say. And then just a little bit about workflow. What you see here in front of you now is this form is actually, it's doing 3 different separate things. It's collecting the information from the applicant. It's also providing workflow to the various folks in the process. So this step is actually going to come to the Finance Authority, where we will be assigning the loan number, verifying the Plaid process took place, and then submitting it on to the first reviewer at the bank or CDFI or credit union. And I think that I've covered the application, Marquita, unless there's something else you would like for me to demonstrate at this point.
I don't think so. I think at this point, Joanna, we could probably go on to questions.
Okay, great. Thank you, Marquita. Thanks, Adam. As mentioned, please feel free to type in questions. You can find that on the right side of your screen in a little gray horizontal box. There's a drop-down white space that you can type those questions in. So this is your chance, and I'll go through these, and some of them may be repetitive, but it's great to make sure that the information that is coming out is confirmed and clarified. So I'll jump into these. So Nicholas had a question about the required credit score. Can you guys speak to what the required credit score or credit requirements are?
Sure, and that's a great question. We are not looking for a specific score. So we are assuming that borrowers, that applicants are creditworthy unless they demonstrate that they've got a collection or a charge-off from a telecommunications, utility, or rent creditor, and that would be in 2019. So if in 2019 you didn't pay cell phone bills and you got a charge off, that would disqualify you. If after 90 days the utility company put you into collections, that would disqualify you if it happened in 2019. So there isn't a specific score. We're only looking for these very specific credit behaviors and experiences in 2019.
Okay, thank you. We had another question come in about, is any of the information available in Spanish?
Thank you. We probably should have mentioned that earlier. We do have the frequently asked questions on our website in Spanish. The application will also be available in Spanish. So all the documents up until the loan agreement. The loan agreement will be in English, but everything else will be available in both English and Spanish.
Thank you. If an applicant is missing a document, will the lender be able to upload this document? I guess they're referring to maybe at a further time.
Right. Adam, you want to go through how that process works?
Sure. So the application will not be submittable without all of the required attachments that were listed. So they would need to be prepared to have the full list of documents in electronic format when they start the application. However, if the application makes it to the reviewer and for some reason one of the documents is not legible, there will be a process in place by which the reviewer can contact the applicant and send them a secure link to provide a new version of the document that's more clear, and come back over in the same encrypted, secure way that the initial one did.
And that holds true if, in fact, they submitted their 2018 business tax return. We do require the 2019. The statute is very clear that the 2019 taxes are required. So if they've submitted the wrong year, that would be the opportunity for them to get that corrected as well.
Thank you. And another similar question about the application process. Does the application time out online if we're not actively typing?
Sure, I'll take that one. So the timeout period is extremely long. I would say it's at least a couple of hours. I would find it pretty unlikely that that would occur to somebody with the length and the ease of filling out the application if you have all of your documents in front of you. So I don't anticipate that being a significant problem for folks. And in addition, if for some reason, as we all have our challenges of working remotely, if all of a sudden you've got the attention of your 2-year-old has your attention and you go away and you forget and you come back and it actually did time out, you'll certainly be able to start the application process again.
Okay, thank you. Here's a question from Kristen. Is there a possibility to obtain a paper copy of the application so technical assistance providers can guide them more efficiently?
There will be, I believe what the capability is, there will be a version of a PDF with all of the questions that will be available on our website, such that two folks, say over a call or a video chat, could work on it and get questions answered together. So that's a yes.
Yeah, I would just note that because the application system has built-in logic, there will be different questions asked based on the previous answer. So if you start off by saying that you're a nonprofit, you're going to get a slightly different set of directions for documents to upload, for instance, or the way in which the question is asked than if you started off as a for-profit. So it is a little trickier because it does have the built-in logic. That's great because there should be very few, if any, not applicables. But then that just kind of complicates a little bit having that form, in written format. So we would just note that's an issue that's going to come up depending on your borrower type.
And I would also note that one could have an application form open that's a technical assistance provider and look at it online in a different strategy to understand it and talking to a client.
Okay, thank you. Here's a question asking for more clarification on how the 2 times average monthly expense formula is calculated. And they are asking, is this calculated based on the 2019 tax return?
It is calculated based on the 2019 tax returns, and it's specifically the total deductions or expenses. Some of the tax forms use the word deduction, less the amount taken for depreciation, less any amount taken for another section of the tax code called 179, and less any amount of a CARES Act loan, divided by 12 and then multiplied by 2.
And that is specific in statute. I want people to know we didn't come up with something that complicated on our own. That was put into statute.
That's good to know. Okay, thank you. And let's see, we had a question come in, and if this doesn't make sense, please, Sandra, type in how we can answer your question better. But it says, when you say borrower, are you saying the business name or the applicant name will be disclosed?
The borrower name is going to be disclosed. So the applicant, the entity that takes on the loan.
Okay. All right,
That was
great.
a really
Thank
good
you.
question. Wow.
And then another question about, what is the turnaround time on the loan process?
The process itself of the application and the review, we are setting a standard that we would fund loans within 10 days of the loan closing. Our processes are actually set to go faster, more like 5, but for purposes of communicating out the expectation, we anticipate being able to close within 10 days of approval.
And one of the things we only focus here on what happens as part of the application process, but once you're approved, there's no additional documentation that's needed. So everything is being asked up front. There's a lot of documentation, tax returns and things like that asked up front. But at the point at which you're approved, you'll then just be sent a set of documents to sign via the application system using their electronic document signing process, very similar to like a DocuSign, but it's their version of that process. So there's nothing else to do other than to sign the documentation as directed, send it back, and then we will be depositing the money, I think within about 3 days after that, depending on when you sign the loan document and when we get it back. But then we're funding these twice a week, and that money will go directly into the account that's put on the at the very front end when we are verifying that account. And then we'll do one double check and make sure that money got deposited to the account that was put into the application. So again, we want to check against fraud and make sure that you got the money the way we think you should have received the money. So we'll do that last check after we send the money out.
Okay, thank you. Here's a question about the CARES Act loans. When you are deducting those loans, does this include the advance grant, the $1,000 per employee? as part of the SBA programs?
So it just requires the loan amount. So the amount that we have to deduct is any loan that's received as part of the CARES Act.
Okay, thank you. Let's see, going through these, some great questions. Let's see. Some of these are repetitive, so we've already answered them. And here's a question, if you can, let's see, do you have that up? They're asking about the, if you can repeat where they can find the application.
Oh, sure. It's going to be accessed from our website, again, starting next Wednesday, and it'll be the new website, nmfinance.com. If you Google us and find out that our website is nmfa.net, which was up until I think today our website address, it will be redirected over. So either nmfinance.com, or if you Google us and find nmfa.net, it'll send you there as well.
Okay, thank you. And then there was another question that is asking about the FAQs, where they can find those.
Those are also listed on our website.
Okay. All right, and we've got one other question that talks about, can the funds be used to expand an existing operation which is negatively impacted because of COVID?
So I think the answer to that is, as long as you meet the qualifying criteria, specifically the 30% decline in revenues or gross receipts between April and May of 2020 as compared to 2019, as long as you meet that basic qualification, that you meet the additional qualification about your annual revenues not exceeding $5 million, and you meet the residency requirements. The way in which you use the money, you're limited only by the requirement that at least 80% be used for ordinary expenses. If that is marketing, expansion, I don't think for our purposes we care. We care if you are going to spend that on salary for equity owners. That's really where our big concern comes in. The definition of eligible uses is very broad. The only place where it limits it is in the amount of money that can be spent on salaries for equity owners.
Thank you. That's great information. And then we have a question too that this might be a good one to end on, but if you can repeat the contact or the address that they can go to for further guidance with the application.
Sure. I would say that one of the best places to go if you have any questions is recovery@nmfa.net. That is an email address that's manned by several folks. We are putting people's names on it now for for those that want additional information, for those that want a direct link at the point at which the application is open. That's a good place, but we're also answering questions there as well. We are working remotely, and so the best way to make certain you get a quick response is to email us at recovery@nmfa.net, and people will be getting back to you.
Okay, thank you, Marquita. I think that sums up the majority of the questions, and I would like to point out that we will send these questions on to NMFA, and if we didn't answer your questions, feel free to reach out to us and we'll get them to NMFA, or reach out directly to the address that Marquita just mentioned, and we will address those. I think I got to every one of them. I'm just looking over at them really quickly. Anything that you want to add, Marquita or Adam?
I did see one question come through that I wanted to clarify with regards to the qualifications between the 30% decline and the receipt of CARES Act loans. And to reiterate, it's just loan components, not grants related to the CARES Act. And it's just that amount is deducted in the calculation for the loan amount. So if you did experience the decline and you received those fundings, and you are less than $5 million, then you do qualify for the program as long as you also meet the residency requirements. So having received CARES Act money does not disqualify you from the program.
Okay,
And
thank you.
I don't have anything else to add. Thank you all very much for your time today. And thank you, Joanna, for hosting us today.
Yes, no problem. And I guess I do want to add too that when we send out the link to all the registrants, we'll include the registration link for tomorrow's webinar, which is at the same time and is directed at business or more general overview. But thank you so much, Marquita. Thank you, Adam. Thanks for your time and all this great information and all the work that you're doing on this. And thanks
Great.
for all those that are participating.
Thank
Great.
you.
Have a good day, everyone.